Welcome to the Founder Story Podcast, where we learn from entrepreneurs about their journey from their first inspiration to their first employee, and even the steps they took to become the powerhouses they are today. Welcome back to another episode, everybody. My name is Rick Porter. I am your host, and today I am joined by Mike Flanagan of Mortgage Unity. Mike, welcome to the show.
Thank you for having me.
So before we dive into your story, I got to tell the listeners, as always, after we interview a guest, we always ask them to introduce us to somebody who also has a phenomenal story you think is a great entrepreneur. And I was telling you before the show, you actually got recommended by multiple people, so I'm actually really excited to hear this story. I hope it lives up to all the hype. No pressure.
I'll do my best.
So before we dive into your founder story, tell us a little bit about your business and what you guys look like today.
So Mortgage Unity is it's a mortgage broker. I've been in the mortgage industry for 12 years. Took a little hiatus after the 2008 housing crash, but that was more just a necessity. The jobs weren't paying, had to pay bills and go on. But I always kind of kept my foot in it, kept my, kept learning about it, kept growing on it, kept coming back to it. And Mortgage Unity has kind of been the amalgamation of all that. And
nice. Now you guys have locations.
So we have physical branches in, we have 3 in Massachusetts. We've got, we have 1 in Florida. We have 1 in Arizona, technically 2 in Arizona, but 1, main one. One's another brokerage that we're kind of joining forces with. So, we just kind of have this weird smattering of all over the place. We're licensed, I think, in 7 states, soon to be 8 or 9. New England, we just do a lot of the border states, and just especially with the way the real estate market is right now, we're seeing a lot of people that. Can't find a house in Metro West or Worcester area, and they're venturing out to New Hampshire, Connecticut. So we don't want to lose that fringe business.
Yeah, makes sense.
Yeah, so
makes sense. Well, the company definitely sounds like it has grown over the years and spread into new markets.
Yeah.
Very interested to hear that founder story. So let's take it all the way back to the beginning. The first thing I always want to know is, first of all, what in the world made you want to be an entrepreneur? What made you want to put yourself through that?
I'm a firm believer. I'm a very firm believer that the entrepreneurial spirit it's in you. You're born with it or you're not. It's always something I've been drawn to, even in school. Like I was not a fan of school. I wasn't a good student. I was smart. I got passing grades. I got into a decent college, but it was like it took a lot of pushing from my parents. We were just talking about this last night because my 5-year-old started kindergarten today. My parents were over, and we were talking about the challenges that we had with me in school, and it was I just never wanted to do homework.
Yeah,
plain and simple. My father would come home from work and didn't have to continue to do work, so it was like, why do I come home from school and I have to continue to do schoolwork? Just didn't interest me, didn't want to do it. But I passed every test. I got, usually an A on every single test. My grades were, slid because I never did homework. Big presentations, things you had to do, always got done. But like that worksheet, not interested. Just not doing it. And
you know what they say about payback, right?
Well, the same thing we came to last night. Ironically, too, my son is just exhibiting those same, he's not going to be interested in homework.
Yeah.
And now I'm in an industry where, I just can't put my phone down. My phone rings at 8 p.m. at night. I got to take it, Saturday to Sunday. So now, ironically, no, I didn't want to do homework back then, and I've
now you're doing it 24
carved
hours
out
a
this
day.
job where I can't stay away from it.
So that entrepreneurial spirit, I agree. For the most people, I think people are born with it or they're not. When in your life did you think to yourself or notice, hey, maybe I have it?
Well, it was early. It would even be in my grade school years, like elementary school. Again, school wasn't my thing, but fundraisers, anything salesy kind of related, I was drawn to. And then, even when I was going to college, I actually went to college for broadcasting, TV type stuff. Because at Framingham High School, I grew up in Framingham. They had a really good TV production class. We had our own studio. We would broadcast out to the town. It was fantastic. It was a lot of fun. I had one rule when I was going to college. I didn't want to stay in town. I didn't want to go to UMass. I didn't want to go to one of the Boston schools. I had to get on a plane to go to college.
I love
that was
that
my
rule,
thing.
by the way.
I just,
love that rule.
my mom lived in California for a period of time. She always talked so highly of it. We were very fortunate. I got to travel a bunch with my parents, California, Florida, go see other parts of the country. And I just wanted to experience something different. So I applied to Southern California, USC. I applied to Arizona State. I applied to Miami, Michigan, a few others around, maybe 7 schools. All of them you had to get onto a plane to.
Yep.
And I went and visited. I think I was just like, I want to go visit these things for, school visits. So I get to go like 4 or 5 cool places. And I went to Arizona State and I just fell in love with everything from the weather to the people to the scene.
The athletic culture.
Oh, it was great. Yeah, it was amazing. And so that's where I went. Got to Arizona State, started, going through the broadcasting classes, started in the Walter Cronkite School, looked around, and there were way more beautiful people that were way more talented than I was. And
are you saying you have a face for radio?
I got a face for podcasts.
For podcasts.
Yeah, and phone sales. And I was just at maybe a school that has like the top 1% of good-looking people in the country, and you're like, oh my goodness, this is just...
That didn't factor into your decision of where to go to school at all during the tour, though, did it?
I plead the fifth on that. But it's probably 99%.
Yeah.
When it's just one of those things, you're sitting around, you're looking at it. That's one thing when I was... Mike Barbera was one of the people that referred me to this, and I always enjoy talking to him about these things. And I think we were talking about this one day. Identifying things and being able to see that has also helped me along the way. It was, all right, this isn't going to work. Like, how lucky I'm going to have to get. How many changes I'm going to have to make this work. And I just did the inventory. I'm like, no, pivot. Yeah, pivot. And so...
What'd you pivot into?
So I stayed with the broadcast communication thing because I had kind of gone a ways into it before I made this revelation. And then I just went to a generic business degree, dual. Basically did both and finished them out. But I switched to broadcast management. So I got some management type classes, and, it was like less production, and it was, more like how to run and operate, show run, things like that, and that became very helpful.
Yeah.
Arizona State had a thing called interdisciplinary studies. When you made that kind of pivot late, you kind of took some crossover classes, and they taught you how to, draw from both. And oddly enough, that's another thing that's been hugely valuable over the years, in that you got to learn. Like I learned something from way over here that I'm able to pull in and
apply it to what you're doing
today. Yeah,
makes sense.
It's it's kind of a podcast. When this came out, I'm like, oh, I'd love to do it because I draw so much stuff. I'll listen to a podcast about a guy that's a trucker, and you don't know what the crossovers are. And you're like, oh, that's a good idea.
Yeah,
it's like, not that there's any great trucking podcast, but I'm just using an obscure.
But there might be. You never know.
That there's something obscure about it. You're like, oh wow, I can draw on that.
Makes sense.
That's probably been the number one thing that I've been able to pick up and use.
Makes sense. So you graduate school. You got your dual major now. What's life look like for you after school?
All right, plain and simple. Get job, go home. Get job, stay in.
In Massachusetts, we call that a piker.
Yeah. So get job or come back to cold winters and everything where I can play golf all year.
Yeah.
And so I went out, started searching for a job, and I got 2 offers. One was from a third-party logistics company.
Okay.
Still probably don't know what third-party logistics companies do because I didn't take that one. And then the other one was from Wells Fargo.
Okay.
And so I went to work for Wells Fargo because it was a little bit more money at the time. So I graduated in 2005. So this is like early 2006, and the housing market's just taking off. By the time I got trained and up and running, it's 2007, and everything's crashing. So, but I'm at Wells Fargo. It's the job that paid. It's you're learning mortgage. You're learning all sorts of different lending products. You're learning personal finance, which is things that they don't really teach you in school either. And so it was also kind of fascinating to me to learn these different vehicles that we would use to generate revenue. And how does a company make money giving money away? It's kind of a foreign thing. You learn in business about finances, points and bonds and yield spread and things like that. But then to actually see it in principle, practice, it's a whole different thing. And it created, the bank was kind of a good landing place for me at the time, because I started in on the mortgage side and learning the mortgage products. But then as that kind of was dwindling and falling apart, I could sell other products. I could sell bank card products. I could sell crossover stuff, and it kept me agile, and it kept me in the industry. Eventually, that led to a layoff, like just about everybody else in that industry at some point in time. But it was a great lesson to learn, because it was the one time in my life I didn't learn to pivot. I didn't, figure out. I was like, oh, I'm in this Wells Fargo family, great company, Stagecoach, especially on the West Coast. It's iconic. They're always going to take care of me. That's what they preach, and that's what they show you. And they had a pension plan. That was the big thing. No companies have pension plans anymore. Blah blah blah. And I'll never forget it. It was maybe a week or two before Christmas. We had a big meeting. They had just merged with Wachovia. A lot of redundancies. Wachovia had the same kind of setup that Wells Fargo that we were working at there. We got called into a meeting, like, all right, you guys are and I did well there. I was President's Club. Even in the back, I made President's Club in 2007, which was like the worst year. I think there was like 4 other people that made it. Like, normally this is like a huge thing with 50, 100 people that go. And it was like me and 4 other people in Tahoe. It was like, wow. It was, fun, but it wasn't like the President's Club that you're used to. Yeah. So, did well. They're like, you're the 1%. You guys are staying. It doesn't matter. Like, don't take any other offers. No matter what's happening. You're gonna be good to go. We'll make room for you. And then it was like a week later, I was getting on a plane to fly back to New York City. I was going to New York City to visit a friend, and then come up here to Boston for Christmas. They, coming in. We're gonna do this. We're actually gonna do it like Christmas Eve. Wow. But they're like, you're leaving. You're going on vacation, so we have to do it now. We're terminating your position. So here's your 2 weeks of vacation time. Which, by the way, I was taking 10 days, there for. So I was going on vacation for 10. I was coming back with 4 days to find a job.
Yeah.
I got creamed.
Yeah.
And luckily I was 21. Not. Or 21, 22, in my early 20s, I wasn't 42.
Yeah.
And I wasn't 52. I didn't have the wife, the kids, the mortgage. So it was a good lesson to learn on a cheap, essentially, cheap money for what it could have been.
Yeah, that makes sense. And you came back to Massachusetts during that Christmas break. You still continued to come back. You celebrated Christmas with the family.
I didn't even tell my parents.
Yeah. I can imagine it's a hard thing to bring up around holiday time.
It wasn't. What's funny is I was just like starting to date my wife, my eventual wife.
Is she the one you went to visit in New York?
No. I was visiting a friend. So
we won't get you in trouble.
No, my friend in New York is my college roommate. He was from Manhattan, and so I was just coming up to see him, and it was easy. And one of my buddies from Flanagan was coming down to hang out, and so it was. I don't know. I've always kind of had a very matter of fact approach to things. I got laid off. Like, I'll find another job. Like, it's always, if you work hard, you figure it out, type of thing. And it just wasn't going to really worry about it. My wife, again, girlfriend at the time, wife was going to drive me to the airport, and I came with my box of crap from Wells Fargo. I'm like, I just got laid off. So here, can you put this someplace?
You put this in your trunk.
Yeah. And later, she's like, wait, what? Like, are you kidding me? Like, I'm now dating an unemployed guy that's going to New York City and Boston for 10 days? Like, what's this about? And guys don't try that out there for long-term relationship success. But I just wasn't going to burden the family with it. I'm like, I'll figure out when I get back there. Yeah. And I remember this, too. I was like, I think I got like $2,700 or something for like a severance. It wasn't even a severance. I think it was just a payout of like a defined benefit plan or something I was supposed to get the following year, because that was the reason they let us off on Christmas Eve, because we would have been going into a new service year January 1st. Yep. And that pension and all these different things I was supposed to get would have been vested. So it would have...
they had to do it quickly.
Yeah, they had to make that decision and yank it out. And big corporate company, that's the way they do things.
Yep.
And, you know, no hard feelings, it's business. Like I said, a good lesson to learn at that point in age. But at $2,700, I'm like, all right, my rent at the time, $400 a month. Like, I don't have a car payment, maybe $100 a weekend for beer and going out. Like,
I'm covered. I'm good for like a year.
Yeah. I got months to figure this out, you know? And then it led to a really tough time. You know, it was figuring out, you know, this is when unemployment's at insane levels, and hard to even track what unemployment was, because I remember at the time, the 99ers, you know, people have been on unemployment for 99 weeks, and now they were off unemployment, so they're not considered unemployed. They don't have a job.
Yeah.
So you're just, you know, I bounced around from selling, I don't know, I sold marketing, you know, consulting services for financial. I sold health benefits.
Now, was this all back in?
It's all back in Arizona.
Okay.
Yeah, so I'm still living in Arizona, and it was just, you know, jumper. I worked a couple jobs where I worked a month or two, got commissions, was waiting for payroll. Company shut down before you got paid, and I was very fortunate that, you know. It's funny, you think people have these great, like, I'm a genius.
I planned this.
Right, no, it's a lot of luck. And, you know, maybe not a great, you know, founder's tale to say that, like, I got lucky along these ways. But I did in a lot of instances. You know, it's knowing when an opportunity shows up. That's the identifying and knowing it's an opportunity, and that you are lucky. That's a whole different thing than these things coming across. You know?
Yeah, absolutely.
I was fortunate. My parents weren't really hard hit by the housing crunch. My dad worked for TJ Maxx and Marshalls. He worked in corporate there. Off-price retail, did very well in that period of time. So, you know, I was very lucky that they gave me maybe more leash and more, you know, hey, I need rent, I need my cell phone, and things like that. Like, I'll be the first person to say I was very lucky that they could afford to help me with those things, you know. But then on the backside of that, knowing, all right, hey, I learned this lesson, and then using that later in life, you know, has really kind of been invaluable in knowing what's there. But if you want to talk about the founder's tale of how I am where I am now, the best thing that could have ever happened to me was that housing market crash, by a mile, okay? Because what happened was, I learned, basically, I got a crash course in how everything worked, all right? I learned some pretty high level stuff in all these different derivatives and all these different products that were on the marketplace, and I watched them all go away. And then I was like, all right, why did these go away? So I started researching that and figuring out, why is this not a thing today and it was tomorrow? So then you learn about securitization of these assets and securitization of what these things can be bought and sold for on the secondary market. And then the thing like Dodd-Frank comes in, and you know a lot of the reasons why these things are being implemented. Whether you agree with them or not, this isn't a political statement, but you learn what they're...
You had an understanding.
Yeah, and there's a lot of that I'm not a fan of, but there's a lot of it that you're like, okay, I see what they're trying to do here, and you figure it out. But more importantly, it burned the earth, and it burned the business, and it chased out so much riffraff and so many people. So when it started to come back around, you know, anytime there's a market drop like that, think of like a ball rolling down a hill. If it rolls gradually to the bottom, it's going to roll gradually back up to the bottom. Well, if you drop it from the ceiling, it's going to bounce pretty high. And how bad things got in Arizona was probably one of the worst. Arizona, Vegas, and Florida, I think, were the three worst markets if you were to look at them. It got so bad. So my fiance at the time, when we started like deciding to move in together or deal with this, you know, we were looking at the house that she owned. I think she bought it for $300,000, call it. We were like, should we get rid of this thing? Should we sell it? Should we do it? Couldn't sell it for like $125,000.
Oh wow!
They couldn't sell for $140,000. You know, so it's short sale, foreclose it or keep it. And modifications we go in. We'll modify it, keep it. It'll come back later. We eventually sold it and got out from under it for, you know, maybe a little bit more than she bought it for. But you know, just to be able to juggle that and understand what was going on there. But that's how bad it got. It was over 50%, you know, property value drop in her neighborhood, largely in that area. That's what you saw.
Yeah.
So it was like, when it came back up, it came back up quick, and they needed loan originators. And I remember getting a lot of calls, finally, like, hey, Mike, you have on your resume, you have an NMLS number, you've got these different things, like, you've kept this active, like, do you want to come back in and do mortgage full time? Like, not particularly, but maybe. And then they started throwing around, like, decent bonuses to come back, and I was like, okay, for that, I'll come back and give it a shot and see what's happening. And it had just eliminated so much of the workforce. It was like really old people that were able to make it, the guys that were fiscally responsible and saved in the bad times, and it's just like a really aging population. And then there was like me, who was young. I only needed that $400 a month for rent and beer money to survive, and like here I am, and I have the knowledge, like, so it just kind of got me right back into it. And now if you have someone that's in their 30s that wants to buy a house, and that's who, like, where the comeback came off the backs of, especially in a market like that, younger people, because they didn't have their house foreclosed, they didn't have their house short sold. So it's like a lot of the people that maybe would have bought but just hadn't yet. Yep. And then they're the ones that had the credit to buy, and they didn't have their stuff decimated. And who are they going to relate to? The 62-year-old broker that, this is how we always do it, come on down. Or the guy that's their age and is at the bars with them. I'm like, no, like, come on, like, it's easy, we'll show you what to do. Well, like, you're just going to want to work with people that are more your speed. Sure. And technology now is coming into the marketplace, and DocuSign and all these different things that, like, the mortgage world will fax it to me, blah, blah, blah. Like, no, just e-sign it over, scan it. You can do this on your phone. Your cell phone. Yeah. Like, all these things that just made it easier to do it. And I was so far ahead of the curve because I had that past training that now, again, I'm so far ahead of the game when things come back the other direction. And that's kind of when I was like, all right, this is going to be my career. Like, I don't particularly love mortgage finance. It's not exciting. It's not podcasting. It's not technology. It's not, anything really that enticing. But what I do love about it is what it does, help people with wealth creation, helping people achieve their goals, helping people have that house they raise their kids in. It's just a very rewarding job. You're talking about home ownership that's such a pivotal part of people's lives. And it's a unique thing because people always go buy the house and then figure out how to pay for it. It's like, just like in Google traffic, mortgage broker gets like 1/1000th the hits of real estate broker. People want to fall in love with that house and figure out, I want the big kitchen, I want the open concept, I want the yard. All right, now how do I pay for it?
Your logistics.
Right. Third party logistics, all goes back to that.
So you're in Arizona, you're falling in love with this new career, it's rewarding. Yeah. Does Mortgage Unity start in Arizona?
No. So Mortgage Unity, what's the right order to tell this? So we don't end up moving. So my wife and I get married out there. Lived in Arizona from 2001 when I went to college. I'd come back and for summers and things like that. But I largely lived in Arizona from 2001 until we moved back in 2015. I think 2015. And Mortgage Unity doesn't even start until Mortgage Unity has actually just turned 1 year regulatory approval. So we've been in business for 1 year. It's been just a seismic year for us. And Mortgage Unity starts, actually, my old employer, which brought me up to the Worcester market. I was working for a direct lender, Movement Mortgage, and they needed someone out in the Worcester market. I wasn't too keen on coming out to the Worcester market initially. I was living in Hudson at this point in time. Just to back up, my wife and I had our son Tommy in 2015, and we were like, we want to be near family. And I have a very large family here. School systems are great. An opportunity came up actually with a different direct lender, large one, guaranteed rate, that people are probably very familiar with. I took that job, and that brought me back out here because I was doing a lot of new construction and builder financing, and so I have a lot of opportunity and assistance to help them with that portfolio product. So they brought me over, and that afforded the opportunity for my wife. Was like, all right, well, I would really love to stay home with the kid. She was in insurance, commercial insurance underwriter. She didn't particularly love her career. She was very good at it, but she was like, I really want to try and raise a family. And I'm like, well, this job pays well enough that if we went back to Boston area, we could try to make that work, type of thing. And so that's what brought us back here. And then guaranteed rate, I ended up taking an opportunity with Movement Mortgage. And then at Movement Mortgage is when I kind of hit the end of the line with direct lending. And that's when Mortgage Unity was born. Because I was looking at a promotion at Movement Mortgage that just I was not excited about. I was looking at the duties and the added responsibility and the travel. I'm like, there's just got to be a better way to do this. And when I say run at the end of the line of direct lending, that's not a bad statement on Movement Mortgage. They're a very good company. But though, I don't know how much people know about mortgage. Mortgage broker gets thrown around a lot. But broker is a specific business model. It's a specific setup of a mortgage company. There's banks, direct lending, and broker. These are three main buckets. Direct lending was born out of the financial crisis. And this is all an oversimplification, so somebody's going to watch this and be like, that's not true. Oversimplification. But direct lending had existed before.
Sure.
Became more popular after the Dodd-Frank was implemented. Regulatory-wise, brokers got creamed. Wholesale mortgage brokers got creamed in that. It just became so hard to operate, and in the broker space just became such a tough place to go. It went from maybe over 50% market share down to under 10% market share. And then direct lending boomed because all those brokers went into direct lending. Direct lender is a non-bank mortgage lender. So Fairway, guaranteed rate, Movement Mortgage, they're your large direct lenders. And direct lenders will write, fund, sell their own loans to Fannie Mae, Freddie Mac. Broker is going to basically write them on, package everything up and then pick a lender to sell them to, And banks are going to largely make the loans out of their deposit base and then turn them to the Fannie Mae, Freddie Mac. So they each have their advantages and stuff. And banks became restricted with the way, liquidity things. We'd have to really get into the economics of why, but liquidity issues, different things like that made them hard to do the volume of mortgages that they were doing, which is why it shifted to direct lending. Brokers, the compliance, all that stuff was kind of moved into direct lending because of the sheer legal and compliance risks and stuff. And that was, I was in mortgage because I basically owned my own business and I was an entrepreneur without having to own my own business and do that. And it wasn't really on my radar until I got my graduate. I went back to Northeastern when I was here and I got a master's degree in finance and an MBA. And then I started thinking more all right, I could legitimately own a business. And is mortgage the right one? I don't know. But, let's start to look at the path to do that.
Yeah.
Because I was, with any large company, you're going to get these tiers of, we call it tiers of comp. You deliver a mortgage, there's so much money in it, and then people are, your regional director gets this, your market leader gets this, your national director gets this, and it's like, we deal with all the stress, we look at all the clients. I don't really see a lot of support, from these 5 tiers above me. They do a lot for the company, don't get me wrong, but for me,
for you directly,
I'm not getting a lot of feedback. They're not helping me grow my business as much as you would think that they were. Especially when I got to the level that I was at, that I have my own clients. I went in there with my own clients. I don't need these crutches anymore. So it's like, but how do you get out of that with the compliance and stuff and technology? The wholesale lenders kind of came back and started investing. And the biggest thing that probably happened is brokers got organized. And the Association of Independent Mortgage Experts was huge with getting brokers the information in one place on how to do it and how to do it compliantly and how to not, have to lean on that legal department that who knows what it's really costing. They throw these astronomical numbers at you. And but come on. None of my clients have sued me. I'm not sending you all these contracts review. How much is this really costing me? You're doing my financial reporting, all that stuff, but it's what are we really spending on this in my little silo? And so you end up cost sharing for all the people that are problematic, and it just gets to a large enough scale where you're like, all right, there's got to be better ways to do this. And then when I was getting my graduate degree, I finally realized I just hadn't had all the information. I was trying to put the puzzle together, and I was missing, a third of the pieces. And I just learned so much through that program that it was like, all right, I could.
It became more obvious.
Exactly. And when my manager there, who's actually my business partner now in Mortgage Unity, we own it 50-50, and we were talking a lot about the landscape of lending, and we're watching our rates to the consumer go up in direct lending and the service levels go down. We're like, why is that? All of a sudden market share for brokers, which was 10% and under, is now 15%. It's going the other direction. And it's funny, you talk about being lucky, and I'm going to kind of circle back to this. It's guaranteed rate. Another good company was not a good fit for me and where I was in my career. It was a lot of stress, not a lot of control, and I got kind of in the position that drew me back here kind of put me in a tough spot. I was reporting to the West Coast from the East Coast, and so the East Coast was looking at me as competition because those tiers of comp aren't making money off my production. I mean, they're kind of right, you know what I mean? Sure. It's like if I'm in here taking loans out of their backyard and the money's going, to some other part of the country that they're never seeing, like, it doesn't make sense. But I made this really great friend, Nick Heth, owner of Phoenix Mortgage Brokers. I gotta give him a shout out because he helped me when I went in there. He helped me show, how to work their systems, and like this is how you really gotta do this. I'm like, okay. So I feel like I got my MBA in mortgage lending from Nick, sure. And another buddy, Aaron Lee. So two of probably my best friend colleagues were at the job I hated the most. It's like learned so much there, and Nick had gone broker. And so I'm looking at like my hours go up, my income is doing well, but that linear progression is now getting out of the balance. I'm like, I'm working this much for this amount of money. Like, who's really making the gains on this? And Nick saw it, like, you gotta go broker. He's like, you gotta go broker. He's like, I just went broker. Like, this is it. And I remember going to Nick's office, and never forget, it's my brother too. We were down there, I think for the golf tournament, Waste Management Phoenix Open, which I went to every year when I was in college. I go back every year. Took my brother, he was graduating from Boston University, and he was going to med school in Atlanta the next year. So I'm like, all right, let's go down and blow it up at the golf tournament. We're in Nick's office, and Nick comes in, he's like, you guys want some money? Go to the bank. He's like throwing these checks that he's cashed. And I'm reading these things, I'm like, holy crap. I'm like, I just closed a loan for this much, and I made a fraction of that, and his rates are better than mine. So I'm like, all right, now it's time to figure this out. Yeah. Like, why is he making so much more money at a better rate with a better experience to the consumer than I've got? And then we just started looking at it. We learned that basically all the technology, all these compliance things that you thought you needed these large companies for were readily available to you in kind of like an a la carte option. Yeah. And it was wildly affordable for what we were putting it on. And so, Kim and I started just looking at the numbers, and we're like, we can spend this amount of time doing this for someone else's company, which are really the same principles of doing it for your own company. And when I just did the math, it was a no-brainer to take the shot. And it couldn't have been a better time. You couldn't have had a bigger tailwind at the time too from the market, and go from there. So I would say, common theme, I got lucky a lot along the way. But I also knew, I also was watching it and paying attention, and learning that lesson at Wells Fargo back 10 years ago, and then coming around and being like, all right, I'm seeing this get out of whack again. My work's getting higher, my income's not. Like, I'm not saying direct lenders are going into business. I mean, of course they're not. They're a great business model for a whole lot of people. But on the flip side of it, I'm like, there's a better way for me to be doing this now. Jumped out ahead of it. And it was funny, when we did it, we filed our broker license, I think in March. I called on it in January to the state, Mass. How long would it take to get a broker license approval? 3 to 4 weeks. Okay. And then that market share was going up so much in the broker space. When we filed it in March, it was almost 6 to 8 months. So I'm like, all right, I'm glad we're on this now, because who knows how long it takes to get a broker approval, down the road. And now, especially with things like COVID came up, I can't imagine how long it's taking to get something like that through the system now.
Right now.
So
absolutely.
So, and then, and it's been the most fun, the most rewarding thing I ever could have done, and it's a great challenge, and it's not often you're looking at these different things and you're like, we can do this for less money at a better experience to the consumer.
Yeah, exactly.
And,
you call it luck. I know you said that kind of is the common theme and one of the things we've talked about, and I do believe that luck per se does play a large part, but I think that a lot of people sometimes even confuse luck with somebody who's working hard and recognize the opportunities that were there, and when you combine those two, it might feel like luck.
Right.
But not everybody else could do the same thing.
There's this one corner in our neighborhood where we live in Arizona, where there was an out of business Blockbuster.
Okay. Yeah.
My wife would drive by it every day. She goes, that's a great place for Einstein's bagels. Just what she always said. It's a great place for Einstein bagels. Like it's perfect. Like there's nothing around here for like my wife's a huge Einstein's bagels fan. So if anybody from Einstein's and send my wife some
free bagels.
But she'd be like, this is a great spot, blah blah blah. Well, sooner or later someone actually put an Einstein bagels in there. And she'd be like, oh man, how lucky are they? Like that they actually got that? No, they just figured out what it was to get a
you already
franchise. Yeah, you knew it. Like, it's just they had the means and the effort and the energy to go figure out how to put that together.
Exactly.
It's, someone looks at that and says, "Oh, they got lucky." Like, no, they just did it.
Yep, exactly. So let's talk about it. You recognize the opportunity. You certainly worked hard. You got set up here in Massachusetts.
Mm-hmm.
You've been in business for a year. How's this year gone?
Wild, just wild. Yeah, we're. We hit our year 1 goal, I think, in month 4.
Wow.
And we hit our 2020 goal in like March. Like it's just been huge, and it's been, just amazing the response you get when you kind of take that shot and you go out and you're like, all right, yeah, I'm starting my own mortgage company. How many people just really, support you in that? And I'll admit, maybe my customer service times and things like that, because I'm being pulled in so many directions now, have gone down, and people's just willing to be like, all right, cool, like we know you're figuring it out, and that support, and largely, or I shouldn't say customer service, I mean just like turn time, like how quickly I can get back to someone. That's taking a little bit longer, because especially in this market where we're just seeing insane record numbers of applications, and we're in a period of time where I can't really go out and hire people to handle these things. So it's like, me and my business partner and the loan officers we have are just trying to like hammer through these things. And it's also a time where any mortgage is taking longer to get done.
Banks are slammed.
Just in little things, like I was talking to Greg here when I was coming in, getting a tax cert. How do you do tax cert when the attorneys are getting the tax certs, but the place has been closed and the lady's not in there, or in there 1 day a week, and you're trying to confirm that, like something that you got in a couple hours, or maybe a week max, is now to try to figure it out. Or verifications of employment. There's this one little thing, the verifications of employments that they got to do. They're supposed to call a published number from the company, and there's 2 types that you do. One happens early in the process where you're trying to figure out income, but then there's a closing one that happens at the end that most people don't even probably realize happens. They call your HR, hey, so-and-so still working there 3 days before closing? Yes, they are. Okay, great. Well, those became very problematic because HR departments were closed.
Yeah. They're all working from home.
So like, I remember the first one this came up, they're like, yeah, we got to call a published number from the company, and we can't get anybody there. I'm like, why do you have to do that? I'm like, well, we always do. I'm like, well, I've been doing this 12 years. I didn't even really know that was a rule. They got to call like a published number from the company, because it was such an afterthought. Like nobody ever, how hard is it to get someone on the phone at an HR department? And is they still working there? Yes, like that was it. There was maybe minute exceptions to that rule, or one would come up, but just such an after. Now it's like a real problem. Or you get to the end and, oh yeah, they've been furloughed, things like that. So, so everything, it's great to be so busy. It's great to have it, but we're, able to increase our database. We're able to get everything, we're able to do a lot of stuff that we really thought would take us a lot more time to do it, and we're, doing it like out of a cannon. So,
so what's the future look like now? You've had a phenomenal year one. You hit that in 4 months. What are your plans for the future?
So I mean, we had contracts with our previous company, so those have, our non-competes and non-solicitations have just come up. Not that we're going to go pillage our whole company, but there's also complications like recruiting and different things that we call people in our database, and it's in that one that we technically shouldn't be calling it. And we were so hyper focused on learning how to do our jobs well and implement our business plan that it wasn't really a huge
marketing effort.
Yeah. So now we're in growth mode, and we're going to be trying to hire. I mean, here's my philosophy, and here's ultimately where my divorce with direct lending came from. The direct lenders have lost sight of who their client is. So this is going to be my pseudo pitch in this thing. Okay? So any of you loan originators out there, you're the client of the lender. You're the client. Yes, there's all these people that borrow from them and do their loans, but when you leave, that network leaves with you. So you're the client. They remember that at recruiting, and they remember that when they hire you and they try to pitch you to come in. Forget it very shortly thereafter. And it's, if they spend a little more time learning and remembering that the loan originators are their clients, and when I leave a direct lender, my 30 to 40 million that I do each year is leaving with me. Like I go through my database. I don't know a lot of people that use me because my business card said Movement Mortgage or Guaranteed Rate or even Wells Fargo. Yes, brand recognition was something, and there's a value to that by all means.
And build some credibility for you, but
exactly.
It's still your business.
But at the end of the day, they use me because someone was like, Mike knows his mortgages. Mike knows how to get these things done.
He gets back to me quickly.
Mike knows how to pull this together. Mike knows when you should be using this product versus that product. And you could call, that's the reason, call center mortgages are so poorly rated. They might have great pricing, but who knows if they close? Who knows if you're getting good advice? Who knows if you're in the right product? A mortgage product is a lot like a fingerprint. It's specific to you, and it's really one of the hardest things for us to get through to the client, because who do you go to when you need financial advice? It's usually, who do you go to?
I go to a financial advisor.
Okay, you're different. Most people would say my parents.
Sure.
That's the answer we get the most often. But your parents or your Uncle Bob or your cousin probably have very little financial similarities to you in what you're doing. For a long time, we would get, I have this great presentation that I would do. It was pulled right off of my Facebook. And a friend posted a thing that was like, first time home buyer, anybody got great advice? And one of those things. And she had a great network, so there's 40 comments. So I took it, I blacked out her name, and I, put green dots over the good advice, red dots over the bad advice, hiding the picture of these people.
50-50?
Oh, it was like 99% bad advice. But it was stuff that was very specific, maybe to that person. That made sense.
This is
them.
what I did.
Right.
This is what I did.
We got a lot of. There was a lot of this common theme that was like, wait till you save up for 20% down. Save up 20% down. You want to avoid PMI at all costs. You want to avoid PMI at all costs. That was a very common theme. Well, forget what she did at the time. I think she was like a nurse, and her husband is like an auto mechanic. And they were looking in Natick, Sherburne, those areas. What's a home there? $500-600. How long is it going to take them to save up $120,000?
Yeah.
Insane. It's, if attainable at all, who knows what the housing prices are by the time they come up with that kind of cash. Mortgage insurance is just interest by a different name. It's the cost of borrowing money. So it's like, all right, and the interest rates move with the market constantly. So all right, here with 5% down in mortgage insurance, it's essentially borrowing at an interest rate of 4.25 when you could get it at 4. And it's just like, okay, let's look at the facts and let's look at affordability. Let's see what makes sense, you know. Another common thing that we're getting a lot is requests for 15-year mortgages.
Yep.
And well, my parents say I should pay off my mortgage, you know, get the mortgage paid off as soon as possible. Okay. You're borrowing money at 30-year fixed at, you know, 2.75%. Your parents never had the opportunity to buy. My parents' first mortgage was at like 16%.
Yeah, I was going to say, mine was like 14%. Yeah.
So it's like, so yes, you want to pay those down as fast as you possibly can.
Yeah.
And now our parents are in retirement age, so you know they're not earning, you know, they're not in stocks and equities in their investment portfolios. They're not earning 6-7% anymore. They're earning less. So it does make sense for someone in that stage of life to try to get their house paid off if that's a goal of theirs, or their financial advisors advise them to do it. But you know, if you're in your 30s,
like, first time home buyer,
or you're in your late 20s, you know, and you have 30 more years of growth potential on that income. Like, and I'm not here to be a financial advisor, but I'm here to tell you, go to a financial advisor and see what they suggest you do, because this is, you know, you're getting advice on how to grow apples from a corn farmer. Like, there's two different trades and two different tools and skill sets. So it's like, and that's what we run into a lot, you know. And 15-year mortgages are inherently risky. Like, you're stuck in a really high mortgage payment, and not a lot of people are expecting to be out of work this summer, and a lot of people are. Yeah. So things like that, we want to be able to take the time to do that and explain that to them. And it's hard to do on that direct lender business model where it's churn it, get it in, get it out, do it quick. You know, you don't have a lot of time to spend on those touches, and so, you know, it's like I said, it's getting into growth mode now, getting into this, and going back to knowing who our client is. You know, I want to bring in other loan originators that know what they're doing, and if at the end of their tenure for working for Mortgage Unity, it ends up with them owning their own mortgage brokerage, I'll be the first person to show them how to fill out that application, show them how to do that, because, you know, there's a lot of room in this marketplace. And what we need to do is we need to grow the really good people, the people that are good at it, and stop people from just getting this terrible, you know, one-size-fits-all advice. Like, we're just trying to kind of flip the market share back to where the experts are now controlling it. And if I can do it at a better interest rate, give you better information, and, you know, give you something that's more tailored to your situation,
why would you not want it?
Right. Exactly.
Makes perfect sense.
That's the just real philosophy. Like, we want to help good people get to the right place.
Yeah, makes sense. I love the philosophy behind your future growth, for sure. I know you attribute a lot to success. I would probably make the argument that it's probably not as much luck as you think it was. I think it was a lot of hard work, and recognizing those opportunities is actually taking advantage of them. I think is probably why you are here today. So I really appreciate you sharing your story with us today. It was a great story.
Thank you.
And I wish you all the best of luck in the future.
I appreciate it. Thanks for having me.
Thank you for listening to the Founder Story Podcast. Be sure to rate, review, and subscribe to the show. And don't forget to check out some of the other great stories.